Good day, Market Chameleons, and everyone joining for the first time. Thanks for coming by and watching the Market Chameleon free webinar series. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Dimitri, Market Chameleon, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. With that, one last look at the disclaimer, and let's welcome Dimitri Pargamonik to the stage. We'll be talking about screening call options using volume and open interest filters. How are you doing this morning, D?
Good. How are you, Will?
Great. Let me share your screen. All right, and here's the Market Chameleon landing page, and we're ready to go.
Good morning, everyone. And let's first navigate to our call screener, and then we'll look at a couple filters today to screen for calls based on option volume and open interest. This was a request that came through customer service. So first, I'll go up top, navigate onto screeners, and then we're going to go to long calls. Click on that. This will take us to the call option screener. We have our filters above and the data elements below. And what we will do is change these tabs because we have different tabs. For filters, we have different tabs to view the data tables. And we're going to go to volume and open interest. Actually, before we do that, we're going to change this expiration. It's defaulted to the next monthly expiration. So we have over 16,000 different calls to analyze. We're going to drop this menu and let's select expirations that will expire within the next 30 days. So this will bring us back multiple expirations because if there are options that expire in a particular stock in a week and then 2 weeks or 3 weeks, they'll show up in here. So you could see now we have 52,000 different options, call options to analyze in our data table. But what we're going to do is go to a different view and click on this volume and open interest. So we have these tabs across. We clicked on volume and open interest. And now we have, you can see here the stock symbol, stock price, market cap. This is the option. So you could see here we have March 4th, 190 strike, March 2nd, 195 strike, and so forth. Now that we have all these different options, some options have significant trading volume, some have very little trading volume, some might have no volume on the day. Also, because there are so many different options, there may be options with a lot of open interest, or there might be options that have zero open interest. And what we may want to do is filter out options based on those parameters. So as we go down from left to right, the data elements, we could see here that we have volume and open interest columns. And here we have a few different metrics that we could screen by. We have the option trade count and option volume. So the option trade count is the amount of different trades that happen in this option. So you could have one trade with one contract, or you could have one trade with 10 contracts. You could have one trade with 1,000 contracts. So a trade is a transaction. The volume is the amount of option contracts in that trade. Well, we have a total option volume of 1,266. You can see in this particular option, 263 trades, total volume of 1,266, because you could have more option volume in a trade than one contracts. And here we have the average size. So if we took the option volume divided by the trade count, we just get this average over here. And the idea there is if we wanted to quickly screen by average trade count, if there are very large trades that dominated versus and not a lot of small trades, then this average count would be higher. That would indicate, that there are larger size trades in there. If you have one trade with 1,000 contracts, this would be 1,000. So now we have these three different metrics for volume. We could screen by them. So let's go up here and we're going to click on volume. And we have these trade counts, average size trades, option volume, and even volume as a percentage of the underlying average volume. So the trade count, what this could do is let us look for a minimum amount of trades or a maximum amount. The idea there is if we want to see lots of trades, we could say, well, I want to see at least 50 trades. So this will bring us back. You can see now we have 6,000 where there are more than 50 trades in that contract. We could sort these by highest and lowest by just clicking on it like this. So you can see 19,000, over 19,000 trades, 17,000, 13,000. This tells us that there was a lot of trading interest, probably coming from different market participants. So it's very liquid, probably competitive, lots of activity, and this lets us screen out the ones that have less. We could also go the other way. Maybe we want to look at maybe something that didn't trade a lot, but something that sticks out, perhaps. So maybe at most 10 trades. So here we have now where the options had 10 trades or fewer, but this also lets us compare the volume against it. So you can see here 10 trades happen in this particular option for a total volume of 5,000. So average volume of 500, which is saying that even though there are little trades, they're significant size. Not a lot of trades, but the trades that happen with a significant size. So we could even, now that we have this less than 10, we could just sort by option volume, for example. So this lets us see where there's large volume, but not a lot of trades, like here in LQD, which indicates there's a large or institutional transaction that happened. Okay, you could see here that will give us the average sizes over here. We could also just screen by average size. Let's say above. Let's take this out. What if we wanted to see average size above 50, which tends to be a little bit larger size than your small retail, which was 1 lot, 2 lots, maybe 10 lots. So you could screen this way. Now we're down to 344 items out of the, I forget what, like 16. Let me see. So out of the 52,000 different call options we had to analyze, if we just go to an average size of 50, that will bring us down to 344. So you can see these would be typically larger size trades. Let's remove that. We could also just screen by option volume. If you're interested in something that trades over a certain amount, or maybe under a certain amount, but you could do it. You could do it this way, where you want to say, I'm only interested in options that have at least 10,000 contracts traded on the day. Well, let's click on that. That will take us from 52,000 down to 228 call options that traded over 10,000 contracts on the day. Okay, and this helps traders or as a trader to remove lots of candidates that you might not be interested, because if you're looking for options that have trading interests where you could analyze the trades, it helps with price discovery, see what happened after the trades. If you're looking for those types of setups, then this lets you screen out those candidates. Let's remove that and move to the next one. So here we have volume as a percentage of the average volume. And the idea here is if there's an unusual amount of volume in a particular stock relative to that stock's volume. Okay, so something unusual in NVIDIA would be much different than something unusual in a different stock that may not trade as much contracts or significantly less. So here, if we drop this down and we say, well, we want to see something that traded, that the volume on a day in this contract represents over 50% of the average daily volume in that stock total. So let's say we have, for example, an option, a security that on average trades 1,000 contracts per day. Right, so per day it's not that much, but if a certain contract on a day traded over 500 contracts in that stock, then we might be interested, because that's unusual. Typically you see 1,000 contracts in total across all options, and like stock XYZ, and all of a sudden in stock XYZ, a particular contract traded over 500. We may want to see that and analyze that further. So we could do something like this, show me over 50%, see if anything. Okay, so we had 115 of them. So you could see in AAL, we had in this contract and this contract, maybe a spread traded 50,000 contracts, 50,000 contracts just on that line. Well, that, as you can see, is over 50% of the average daily volume in AAL. In other words, on average, if we took the total daily volume across all the options, it trades at 100,000 contracts. Well, today, just this one and this one traded 50,000 alone. So that shows you that there's an unusual interest in that particular contract, or potentially unusual interest in that contract, which this appears to be probably a spread. Let's remove that and move on to our next filters. Another filter is open interest. And you could have, a lot of volume in the contract, or maybe even a little volume in the contract. But if the contract has a significant open interest, well, that indicates that there was already, maybe not particularly today, but there was interest in trading in that contract. There was trading interest, and there's a position held. So there's an open interest is saying that there are positions that are open, carried at risk on somebody's book. And we could use that open interest filter to see that. So let's say we wanted to trade or look to analyze call options that have a minimum of open interest. So if we, for example, say 20,000, we go from 52,000 candidates to 358. So you can see here that now we have open interest of 109,000, 57,000, 40,000. And you can see sometimes the volume is greater than the open interest, because not all that volume converts to open interest. But this gives us the ability to, let's see, we could sort by this. Filter where there is a significant amount of open interest in a particular option. So that way we could analyze that further, or even go back and see what happened, what led to that open interest. If I'm going to remove this. We also have these two relative metrics of open interest. So open interest as a percentage of underlying total open interest. And this lets us filter by options that may have a bigger concentration of open interest relative to all the other options for that same underlying stock. So let's say we had 100,000 contracts, 100,000 open interest in XYZ. Well, if one of those options in XYZ represented, like, say, 30% out of 100,000, 30,000, we might want to take a look at it to see, well, why that particular option has more of a bigger concentration than the other. Why isn't it just equally distributed amongst the open interest? And here we could click on this. Let's look for someone over 50%. So here we narrowed it down to 3. And you can see here that DOC, the March 20th, 17.5 strike, has open interest of 29,790. Well, that represents 62% of all the open interest in DOC, right? So DOC could have an open interest in the put, a different option in a different expiration, different strike, could have multiple options with open interest, but 62% of all that open interest is in this one option contract. 71% in AALT on the March 20th 10 call, and so forth. So this particular option, had more trading interest than the other ones. Let's unfilter that and do our last one. So open interest as a percentage of average daily volume. And this is a little bit different because then we do a relative comparison of what is the open interest on this contract relative to average daily trading volume. So think of it as like if the average, one way to think about it is this metric they use in the short interest, days to cover, right? So days to cover. Well, if my open interest is 10,000 contracts and average daily volume is 1,000, well, that means there's more open interest than the average daily volume in all the contracts combined. There's 1,000 contracts traded per day, and I have 10,000 contracts just on this one option. Well, there's not that kind of a liquidity on an average day. So it's like 10 times your average daily volume. Or think of it as if I had to get out of 1,000 contracts per day, it would take me 10 days. So let's take a look at that concentration. Let's say over 50%. So here you can see that the open interest relative to the average daily volume, okay, is over 50%. And that would be these. Okay. Let me see if I have, we just have this filter and we don't have the metric here. But that would be one way to narrow down the open interest as a percentage of average daily volume. Well, I'm going to stop there, throw it back to you. That completes the volume and open interest.
Hey, great job, Dee. Thanks for bringing another webinar to the Chameleon community. We will see you tomorrow, my friend.
Thanks, everyone, for joining. Stay safe. Have a great trading day. See you guys tomorrow.
Trade in peace, my friend. Have a great day. Bye-bye. Hey everyone, thanks for joining another Market Chameleon webinar series event. This one on screening call options and using volume and open interest filters. Everyone who is not following us, make sure you follow us on all the social platforms, particularly YouTube. Thumbs up on YouTube and anywhere else there are thumbs. They're greatly appreciated. Everyone, I got a big announcement actually. We are doing our weekly show with Ryan today. We actually haven't had it we didn't have it last week, and we really wanted to put it on this week. So today's the first day available. So that will be at 4:30 today with Ryan Mastro. And let me get that link for you, and I'll put it in the chat so everyone can come on to the show at 4:30 with Ryan today. And here we go. Here comes the link. Now, if you can't join the show and you want us to talk about a particular symbol or equity option series, just put it in the chat. I'll hold on for a few more seconds, and we will. I'll ask Ryan any questions you have concerning a stock or option. That's 4:30 East Coast time, Rob. New York's, we'll do Washington's crossing, but New York time. So 4:30, right after the closing bell. ASML for Mike. All right, Mike, I'll make sure I ask about ASML. All right, everyone. Once again, remember to like and follow us on all the social platforms. Thumbs up, appreciate it on YouTube. We will see you hopefully at 4:30 today. If not, tomorrow morning, same time. Everyone have a great, safe trading day, and we will see you later. Bye.